Hi everyone, welcome to the channel. Today our focus is going to be on Palantir, ticker PLTR. And no, this is not an evil spy company. And if you come across any article or anything of the sort, just move on from it because haters are just going to hate. However, Palantir is a company that enables organizations and businesses to integrate their data with its software for decision making and optimizing operations, while recently introducing advanced AI technology through their AIP platform, bringing additional capabilities powered by large language models specific to an organization or business, while providing added safety measures. Now, since March 2021, I purchased into this company over 70 times, and I do have a high conviction on their long term outlook. And for the first 2 years of owning this stock, I rode the wave all the way down to its lows, where I lost more than 60% of my value until today, where I am currently beating the S&P 500. And although the stock has pulled back recently over the past 2, 3 weeks or so, it is still up about 180% from where it was a year ago. So in this video, we'll look at Palantir's financials, perform a stock valuation, and at the end of the video, we'll use computer modeling to forecast their 52-week stock movement. And after watching this video, if you want to understand or learn more about Palantir, I highly suggest you subscribe to @Amit Investing, as he puts out high quality Palantir videos on a weekly basis. Now, since I do own this stock, we're going to first go into all my stock purchases and then move on and go into the valuation. So let's just jump right into it. So here we have all my purchases into Palantir, and you can see here starting back in March of 2021. And I will admit, I definitely paid too much for this stock back then. Can't remember all the details, but maybe I was a little too eager to get into it. And you can see here in column E what my return is for each of the stock prices that I bought in at. And column F shows if I would have bought into the S&P 500 that day, what the return would currently be. So currently the stock's trading about $18. So you can see some of these initial purchases are still negative. And back in 2021, after buying in, the stock started dropping and continued to drop throughout that year. And one of my thoughts was to dollar cost average, which I did do, as you can see. And eventually it got below $10 back in May of 2022 and continued to fall into December of that year. And that's when I bought at my lowest stock price, $6. I think the stock actually dropped slightly below $6, but that's the lowest I got in at. And currently that's given me a 200% return. And then as it started to recover, I continued buying in. And the last time I bought in was back in November of this year at $14.61. And up here, you can see my overall return so far with Palantir is just over 35%. And if I would have purchased into the S&P 500 on each of these days, my return would be just over 14%. So currently, I'm probably about 20% gain over the S&P throughout my Palantir purchases overall, with a cost basis of $13.23. And down here, you can actually see my overall summary for Palantir. So I probably put in about $66,000 to $67,000. And with that 35% or 35.6% return, that's given me about $23,800 in profit. So my current valuation in Palantir is just over $90,000. So with that, let's jump over and look at their financials next. Here we have Palantir's financial data, and first thing I'll point out is this far right-hand column represents the trailing 12 months, so taking into account the first 3 quarters of 2023 and Q4 of last year. Also, to note is that Palantir only went public back in late 2020, so that's why we only have 6 years of financial data shown, taking into account the trailing 12 months. First data point we'll look at is this top one for revenue, and we can see since 2018, the revenue has been growing. Although trailing 12 months, that growth has cooled off compared to the earlier years. However, mentioned earlier that they recently released their AIP platform, which enables organizations and businesses to incorporate AI and large language models with their data sets. And they've been providing boot camps, getting very positive feedback. Now they just need to bring these potential clients in and start monetizing them, and we can see their revenue growth increasing again. And with that, that would also help increase the net income and free cash flow. And speaking of net income, we'll look at that one next. And we can see here, it's been negative from 2018 to 2022. However, trailing 12 months just turned positive. Now, there'll be some critics out there saying, well, it's only positive or only positive as much as it is. It's because they have a lot of cash on their balance sheet collecting interest income. And without that, this result wouldn't be as positive. However, I don't think it's any issue with a company having cash on their balance sheet. I look at that as a positive. They're not the only company to do so, and also that shows they're in a good financial condition. If they need to, they can look at acquiring another company or reinvesting it in themselves. So I see it as a positive. Next one, earnings per share. And we can see since 2018, it was negative because net income was negative. However, it has been improving over time, though a slight turn back in 2020, but trailing 12 months now in the positive 6 cents. And I'm looking for that to continue to grow over time. They don't pay dividends. Now, shares, this is one of their sticking points. We can see here share count has been increasing since basically since 2018, 2019, and they did have a dramatic uptick back in 2021. And that's one of the reasons why the stock price started to drop as we were discussing, looking at my purchases. But we can see the dilution has slowed down and looking it to continue to slow down as we move forward. And then moving on to book value, we can see growing over time and trailing 12 months up about 25 cents from 2022. So a nice data point there. Now, the big one, free cash flow. So you can see here, starting in 2021, it turned positive and been positive ever since. Yeah, 2022 was a down year, but still was positive, but nicely recovered over the trailing 12 months. Now, since free cash flow we use in our discount cash flow modeling, I'm going to remove these negative values from 2018 to 2020 because that will impact the stock valuation that we project. And also, Palantir is a different company than it was back then. Now they're net income positive, free cash flow positive, and I think they're more focused on their financials, keeping these data points nice and in the positive. One other data point I want to show before we scroll down a little bit is net profit margin. So we see here negative back in these years when we had the negative net income, but trailing 12 months finally turned positive, just below 7%. Now, typically, I like to see a 10% or above. So I'm looking for them to start improving this over time now that they're net income positive, getting 10% and staying above it. But let's scroll down a little bit more. We'll look at a few other data points on a graph, and then we'll go into the stock valuation. Here on the graph, look at a few data points based on the per share value. And I'll point out back in 2021, that's when Palantir really diluted the existing shareholders with that big uptick in the outstanding share count. But even with that, we can see trailing 12 months is either at the highest or the highest for these data points that it's been. But let's just look at each one real quick individually. First in white, revenue per share. We see 2018 just below $1. Uh, then out in 2020, probably at or just above $1. A slight down year in 2021, but then a nice incline here into 2022, and the trailing 12 months looking to be back at that dollar per share of revenue. Book value in red, we kind of saw that above, and we can see here, they turned positive in 2020, and now out here, trailing 12 months, it looks like it's the highest, just above $1.50, and a nice improvement from last year, where I believe it was about $1.25. Then moving on into yellow, free cash flow per share. So this is one I like to see really going up. And again, they diluted those shareholders, but we can see here it's at its highest it's been during the whole period. So nice point there, because we know that free cash flow is upticking and trailing 12 months significantly higher from last year and higher from the year before that. So nice to see that. And then earnings per share. Obviously, it's going to be negative when we had negative net income, but just turning positive at 6 cents. So hopefully, coming quarters, coming years, that continues to grow. So let's move on, and we'll go below, and we will do the stock valuation. Here we go with the initial valuation for Palantir. We can see it's showing $8.67 and with a 90% margin of safety, bringing it down to 780. Now we're going to make a minor adjustment or two in a moment, but we'll just look at what we have here. It's currently set up with a short-term growth rate of 20% over the next 10 years with a 10% discount rate. Now, 20%, some may say it's a little high, especially over the last 2 years with their revenue growth. And that's probably true. It's probably more in that 18% range, but I'm still using 20% as I'm optimistic on this company. And one thing we are going to change is the long term growth rate following the initial 10 years. So typically I use 3%, but again, Palantir is still a young company, at least in the public markets. And I do think they have a lot more growth to go beyond the 10 years. So I'm going to change that 3% to 5%. So not being too aggressive, but something I feel is more reasonable. And in a moment, we'll see the update. And with that change, we can see the intrinsic value jumped up to $11.26 and that same margin of safety, bringing it down to $10.13. So this is where I would think is the fair value for Palantir. Now, it is currently trading around $18 or probably just below $18. And though I do hold a considerable amount of shares, I'm going to hold. I'm not selling to cash out. And I would actually buy in at a higher price than what my intrinsic value is. And that's because I do think Palantir is a quality company and sometimes you have to pay up for quality. So if that stock price does drop below 15, definitely if it gets below 14, I'll probably start buying in again, trying to and increase the number of shares I own. I currently have about 5,000 shares or just over, but I would like to get up to 6,000 and possibly more over time. And one other thing I want to point out here is the index. So currently, Palantir is not in any index, so not in the S&P 500 or 400. However, now that they're net income positive for the past 12 months, that's making them eligible for the S&P 500 due to their valuation. So I expect sometime next year, early part of next year, they should be included in the S&P 500. Now, what that means is more institutionals or any index that tracks the S&P 500 would have to start buying into Palantir. So now, technically, that doesn't change any of the fundamentals of Palantir. However, it should drive the price up more just because there'll be more buying into that stock, though not based on fundamentals, but still, it is a factor to consider. And again, one of the reasons why I am bullish. Now, one other thing I want to look at is I did mention the current stock price is like $18. So let's just see what this growth rate needs to be to hit that $18 valuation. Now, as I said, I'm using 20%, but but let's increase that to 25% and see how that impacts the valuation below. So with a 25% short-term growth rate, we can see the intrinsic value is just under $17 and with a margin of safety about $15.24. So getting close to the current stock price. So let's just tick that up a little bit more. Let's just try 27%. So with a 27% growth rate, we can see intrinsic value jumped up to just below $20 and margin of safety just below $18. So kind of in that range where it's currently trading. So maybe the market is really valuing it based on maybe more of a 26% growth rate over the next 10 years. But if that AIP platform really picks up and monetizing these clients and potential clients, I think you can really see this growth rate getting back up to 35% where they were several years ago. But with that, let's move on and we'll use computer modeling to forecast the 52-week stock movement. Here we are in the computer modeling software, and I already ran the analysis using two methods. First, the M5 rule shown here, and the other is random forest. I will point out this is based on data going up to this most recent Monday, December 18th. In the far right-hand column, that's the weekly average adjustment stock price for Palantir. So you can see $17.59. And the column right next to it represents the S&P 500 ETF, which closed at 472.70. Other columns are just other various data points used for the analysis. Now, I did copy all these results and paste them into Excel, and we'll go over there in a moment as it's a little easier to see. But let's just scroll down real quick just to see what the 52-week outlook is showing for the M5 rule. And we can see here out in basically mid-December of next year, it's actually showing a slight gain just over $18. But let's jump over to Random Forest. We'll look at that real quick and then move over into Excel. So same thing, we got the data up to December 18th with the Palantir at 1759. And scrolling down out to 52 weeks to mid-December of next year, and we can see here, Random Forest is actually showing a slight decline in the stock price, getting to about $17.76, 77 cents. But let's move over to Excel and look at all this data on the graph a little easier to see. So we got all the data moved over from the computer modeling into Excel. And first thing I'll point out is the vertical red line that represents this prior Monday, December 18th. And everything to the left is the historical stock price in blue, and everything to the right is the forecasted. But let's look at a little history of the Palantir stock movement. Now, they've only been public for a little over 3 years, so this starts back in late 2020. And we can see here they opened just around 25 or just over $25 a share, and it did jump up back then, back in the beginning of 2021. But then we can see over the next 2 years or so, it had this decline and hitting its all-time lows back in late 2022, and then recovering through 2023 until where we are currently around $18 or just below $18 a share. Now we're going to jump over to another tab to look at the computer modeling predictions a little closer. Looking at the M5 rule first, what it's showing is that in the early part of 2021, actually the stock declining and falling below that $15 a share, maybe even in that point where I would look at purchasing more stock. But hovering around $15 at times, slightly above, slightly less, going into probably the middle of Q2 next year, and then recovering through Q2 and probably towards Q3, hitting $20 a share where we saw a couple of weeks ago. But again, falling back down, getting close to probably $16, and then recovering again in mid Q4 and projecting out in December, being in that $18, $19 range, which would be probably about a 3.5 to 4% gain from where we are today. Now let's jump over to Random Forest. As we saw in the computer modeling, it was slightly more bearish. Random Forest is showing that same stock price drop starting in Q1 of next year, but not as drastic as the M5 rule, but it is showing a more continual decline over the first 2-3 quarters, and then with a slight uptick, regaining some of those losses out in Q4, but not recovering all the losses and closing out probably in that $16.50 to $17 range, which would be a drop in the stock price of about -4 to -5%. Now let's look at the average. Yeah, now looking at the average of both the M5 rule and Random Forest, so obviously in early part of Q1 of next year, showing that same decline, not quite getting down to that $15 mark we had with the M5 rule, but probably more in that $16 range. But then recovering into Q2, probably getting just above $18 with a little bit of a gain where we are today. But same thing, dropping off in Q3 and then recovering probably towards the end of Q3, beginning of Q4. And in December of next year, it's looking like the stock being in that mid $17 range to maybe $17.80. So about where we are today. So taking the average of the two is showing no gain over the next 12 months. So the computer modeling methods are showing the stock price being somewhere between $15 to $20 over the next year. But I think a big thing that's going to play into this is their AIP platform and how well received it is from the market, from organization, businesses signing up and eventually becoming monetized. So we'll see how that plays out over the next year. But again, I'm probably not expecting a lot of income coming from it, at least in the near future. Probably need at least another 4 quarters to year and a half to actually see the monetization start coming through and really impacting their financial data. To recap, for those that have held Palantir since last year, this has turned out to be a nice Christmas gift, with the stock up about 180% over the past 12 months. And for the intrinsic value that we did calculate, it's showing that price to be between $10 to $11.25. Now, this is higher than what the stock is currently trading at just below $18 a share. But for me, who owns about 5,000 shares of Palantir, I'm not looking at cashing out. I'm in Palantir for the long run, as I am pretty optimistic about his long-term projections. And once that AIP platform really kicks off and they start monetizing customers, I really think that's going to help recover their growth, getting them up to that 30 or maybe even over 30% target. While the computer modeling that we did perform, the 52-week outlook does show the stock hovering between $15 to $20, with the M5 rule having a slight gain out in December of next year, closing about just above $18 a share, while Random Forest is a little more is bearish, with a slight loss of about -4.5% to -5% out in December of next year. So I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.